And with that, let's welcome today's guest, Hotse Langeerar. Hotse is an international commodities trader and investment banker with over 30 years of experience. He's also the author of the novel entitled Federal. It's a financial thriller about a bond trader who finds himself thrown into a maze of political and fiscal deceit surrounding, yeah, you might have guessed it, the Federal Reserve System. Hotse, welcome to the show.
David, thank you very much for having me. Appreciate it.
What are the major takeaways that you'd like to see our viewers be able to get from reading your book, to learn about the Federal Reserve?
The main thing is that the public thinks that the Federal Reserve is a government agency, and it is not. It's a private company whom we do not know the shareholders of, that cannot be audited, that doesn't pay taxes. Nonetheless, it runs our money, it decides what our interest rates are, it decides how much money is in the system, it controls the velocity of our money, it controls M1, M2, and M3, those are money figures.
Sure, the money supply, right?
Money supply, and they control our financial system, and they are a private company. I believe we're the only country in the world where that's the case. And it's unbelievable that it was able to happen in 1913, which is when the Federal Reserve was created.
So the question then is, how do you feel that really affects their policy? Maybe in recent years, what things have been done different because of that? Let's talk about what's been happening. The Federal Reserve seems to be taking a more and more active role, it seems, than ever before. We hear about them on the news virtually every day.
They have made an effort after Greenspan to become more, excuse me, to become more open, to become more transparent. But it hasn't happened. They say they are, but they're not doing it. We don't know whom they're dealing with. We don't know who their counterparties are. We do not know how much money is outstanding to foreign entities, nor do we know who those foreign entities are. We have no idea, nor do they want to tell us. They are very much secret in terms of what their balance sheet really is and who the shareholders are. We don't know who owns the Federal Reserve. We don't know. We do know that probably 60% is not American.
So it sounds like a situation that's potentially, ripe for conspiracy theory.
Right.
Now, I have to confess, I haven't had a chance to read your book yet. I am going to read it, though. Anything about the Federal Reserve is interesting to me, and if you could make it fun by putting it in a fictional format, that makes it even better.
Right.
But is that part of it? Is a little bit of it the flavor of that there's a little chance or risk of conspiracy going on behind the scenes?
Yeah, I mean, it's a novel. It's a fictional story about what happens to a bond trader, which is what I was, that through some fluke or some error in a settlement was able to get hold of $25,000 worth of Federal Reserve stock. Actually, the act itself allows for that. It is possible. It just has never been done. And because he becomes an owner, he is invited into a meeting in Zurich and learns things that is not designed for the public.
And unfortunately, because you weren't that person, you weren't invited into that meeting, you can never know for sure whether or not that those things really happen. But it's like you said, it's nobody knows, so there's very little transparency.
Very little.
Let's talk about, since you're a bond trader, and obviously a lot of people who watch your show know that we talk a lot about bonds and bond-like instruments. What do you think about how the Fed's reacted over the last several years? What do you think about all the unprecedented levels of quantitative easing that have occurred?
There is no defense against deflation. There isn't. Once deflation takes hold, it has to run its course. It's what happened in Japan. 38,900 was the top of their market. In 1989, it went down to 8,000. And they're still struggling along the bottom. It's because they experienced deflation. The Federal Reserve created a financial system that's based on inflation. They can manage inflation, and it's a system that we are familiar with. The money becomes worth less over time, but if it goes the other way, then debt stays the same, but assets drop, and this is disaster. So what they've done over the last 10 years is to infuse incredible amounts of funds into the economy by keeping rates down.
And the problem that happens, of course, is everybody reads the economics textbooks, which say that when you print money, you create inflation. But all those textbooks assume one thing. They assume that all that printed money in circulation will be used to buy goods and services to stimulate the economy. And if it's not used for goods and services, if instead it's saved or used to pay off debt, then you're right, you get deflation instead of inflation. We have to take a quick commercial break. Stay with us. We'll be right back with more from my new friend, Hotse. Now it's time to welcome back Hotse Langeerar. So we know what the Federal Reserve has done, right? The Federal Reserve just printed more money, tried to get the economy stimulated. They got us out of the financial crisis, but didn't stimulate to the extent that they wanted. But now they're trying to reverse it all. What effect do you think that's had on what's happened over the stock market over the last couple weeks and what's happened with interest rates, like interest rates on the 10-year Treasury?
Of course, they have to raise rates. I believe the GDP will come out at 5+. If that happens, they have to raise rates.
The GDP will come out at 5+?
That's numbers that I'm hearing.
Wow. I mean, I'm a fan of President Trump, and most of our viewers are a fan of President Trump, but his goal was 4% GDP.
Yeah, we'll see. And we will find out. But even if it's 4% or more,
you have more confidence in him than he even does it himself. That's pretty impressive.
That's be difficult.
That could be difficult.
I do have confidence in them. But what will happen, they'll have to raise rates to slow down the economy. They will have to do this, which you've already seen. The slide over the last couple of weeks on the Dow portrays that. It was down a couple of thousand, and it's on its own, it's not a big number percentage-wise. But that's what they're going to have to do. The cost of money is going to have to go up.
Yeah. And it's interesting because what's helping push the cost of money go up longer term, is the fact that, last year the Federal Reserve, I think we talked about this last week or the week before on the show, last year the Federal Reserve actually, not the Federal Reserve, the government actually issued over $500 billion of government bonds. They borrowed over $500 billion. This year they're talking about borrowing almost $1 trillion. Now it's not clear whether that includes enough money to replace what's rolling off the Fed's balance sheets. But that increases supply should raise long-term rates, and we've finally seen it.
Right, and whatever the Fed will do, what people don't take into consideration that there's another balance sheet that the Fed is running with, which is the reserve currency. Mm-hmm. So we have, what's our debt? 16, 17 trillion, something, or maybe 20 trillion?
20 trillion on the books.
On the books.
But how about the part that's off the books,
right,
all the unfunded liabilities?
Right, correct. So, but that's what's on the books. What we don't count with is what is our real dollar exposure, including the reserve currency, and it's over 100 trillion.
Yeah.
That's why it is so important that oil stays in dollars, that gold, that all the commodities stays quoted in dollars. I mean, the countries that have stopped selling their commodities in dollars was Iraq. Well, we know what happened there.
Yeah.
Was Libya. Guess what happened there? So it's not a good idea to do this.
So we all know Bitcoin, of course, is going to be the new reserve currency and save the world. We could talk about that if you'd like as soon as we come back from our commercial break. Stay with us, please. We have a lot more from my new friend, Hotse Langeerar. We'll be right back. If you're near or in retirement, head over to theincomegeneration.com and download your special report written specifically for the needs of the income generation. I'm David Scranton, and you've been watching The Income Generation. Now let's welcome back one more time my new friend, Hotse Langeerar.
Thank you.
I was just kidding. I didn't want to talk about Bitcoin, really. Bitcoin kind of bores me. But interest rates. So it's interesting. Why do you think with 5 interest rates increases by the Federal Reserve on the short-term side, why do you think it took until really January for the bond market to come out of a coma and for long-term yields to increase?
I think what happened with the tax reform is that a lot of people got more money. It is perception that drives the economy. And the perception is that they're going to be richer, better off a year from now than now. That will stimulate the economy. It'll stimulate demand, which is basically 75% of GDP. Mm-hmm. And that's why all of a sudden we see this increase in movement, in interest rates. We see this increase in purchase power. Big companies are bringing money back to the United States. Mm-hmm. All that is very, very, very positive.
So the stock market throughout all 2017 arguably was running off half drunk, optimistic, anticipating that the tax reform was going to go through. In the bond market, they said the bond market's smarter than the stock market. I think you probably believe that, being an ex-bond trader. So finally, the bond market wanted to wait. They're from Missouri. They said, okay, seeing is believing. Now that it's through, now we're going to get growth, and that's why rates started to come up. So the question becomes now, where do they level off? Do they level off in the low 3s? And if so, then where do they eventually go? And
I don't know.
What's your best guess?
I don't know the answer for that. What I do know is that markets find extremes.
Come on, you're the expert. You've been trading bonds longer than I have.
Market finds extremes. So the extreme is going to be wherever ultimately the market says it's enough. We could very well go to high 5s, high 6s, high 7s. Who knows? It depends on how well the economy takes off. It depends how well the consumer wants to buy new products. How many new houses are being built? Is the housing market for real or not?
But that's what you're talking about is the component of long-term interest rates that has to do with forward-looking growth prospects, and I get that. However, there's another part of it, and that's demand for bonds. You know, we have an aging population, baby boomers, so you and I are right there,
Yes.
who have an increasing demand for income-based investments like bonds.
Correct.
You know, does that have the potential to offset this and maybe
I don't
cap
believe
it out
so.
at a lower rate?
I don't believe that I don't believe that that is the big part of the economy. It's a part, but it's not the one that drives the economy. What drives the economy is big multinationals. It is other nations, other governments, other government agencies that they're the big buyers. They're the ones that will look at it and say, does it make sense on a geopolitical basis to buy the 10-year right now and hold it for 5, 6, 7 years, whatever the duration is?
So if we really want to know how high the rates are going to go and when it's going to happen, we really have to look at what various governmental entities are doing. Maybe go back and look at with Chinese government if they still have an appetite for our bonds. And,
Chinese
and
are
all
not going
those
to sell
types
their
of things.
bonds. They're not going to sell our bonds.
No, they're not.
Absolutely
They're not.
not. It's ludicrous to think so.
They'd be,
They
shooting,
own- yeah.
they'd be shooting themselves in the foot. They really would.
Especially
So-
now what's going to happen where Trump is going to change the way we do business with them.
Yeah.
You
Yeah,
know,
I agree 100%.
so-
Listen, we need to leave it there, unfortunately. All good things must come to an end. Thank you for being on the show. It's been
it
wonderful.
was an honor. Thank you very much, David.
All right, well, stay with us. We'll be right back with a lot more.